What is up, my friends? What is happening on this beautiful Thursday afternoon? At least beautiful for me here in Texas. A little bit hot, but what is up, you guys? Look, there's so much stuff coming out about the housing market. It's coming at us quick. It's coming at us fast. All about the housing market, all about mortgage rates. Housing market crash. Is it going to crash? What is going on? And there's so much news that I thought I got to get out here and I got to give it to you guys so that you know what's going on. Is this housing market really in trouble, or is this just a figment of the imagination of all the press and all of the media and all of the sensationalism that really runs our 24-hour news cycle? Because guys, let's face it, as I've talked about all the time, negative news sells, positive news does not. But at the same time, we got to keep our pulse on the finger of the data to know exactly what's going on in the housing market with mortgage rates, with inflation, with all of the other craziness that's going on. You know, rising federal funds rate means rising mortgage rates. And so is that going to cool down the housing market? And what is ultimately going to happen? Because for you, the question is, what should you do? If you're a buyer, if you're a seller, if you're an investor, what do you need to be thinking about right now? And what do you need to be doing? And so I thought, hey, let's jump on, let's do this, and let's talk all about the housing market and all about real estate. Now, since it's the evening and not the morning, I can do this with my glass of wine. So if you got one, join in, drink up. It's the afternoon or the evening, wherever you are, maybe the middle of the afternoon if you're on Pacific time, but whatever, we can do whatever we want because it's the afternoon now. It's not the morning. On the morning lives, I can't really grab the drinks. Well, I guess I could, but it'd be a little bit weird. So anyway, guys, on your way in, make sure you hit that like button, subscribe to the channel, throw your comments and questions in the chat box here, which I am putting in the chat box. So throw your comments and questions in there. Love to chat with you, love to interact with you. I love to answer those questions, love to chat with you guys right in there. But without any further ado, I hate that saying, but I said it anyway. Without any further ado, let's just jump in. Let's take a look at what I want to show you. There's, like I said, there's so much coming at us, so many articles, so much news that I wanted to go through a couple of things that I have, excuse me, that I have been looking at in the last couple of days when it comes to housing market, when it comes to what's going on, and again, what you should be doing in terms of your financial freedom, because that's what we're all about on this channel, helping you achieve financial freedom, build wealth through real estate, through business, and then we talk a little bit of politics, of course, because the political landscape and the policies that are being implemented on, you know, could be a state, local, or national level, impact all the stuff that's happening in the housing market. So we got to talk about that for sure. Okay, so let's dive in, guys. First article I really want to start with here that I want to talk about is the fact that mortgage demand is going down, and that is to be expected. So the article headline is mortgage demand plummets as, whoa, I don't know what happened there. Mortgage demand plummets as interest rates hover near 13-year high. Let's get rid of this. There we go. Okay, so mortgage applications have dropped 12% on a weekly basis. So guys, first of all, I want to just relax. Everyone calm down. Not the end of the world. This is to be expected. Why is it to be expected? Because interest rates have gone up from 3% to 5% in a very, very short period of time. And I've shown you the chart, Fed mortgage rates. It's already there for me. Bam, there it is. Let's take a look. 30-year fixed, okay? So check this out, guys. Mortgage rates have really skyrocketed right there, you know, from 3% all the way up to 5%. So guys, look, when that happens, obviously we know that mortgage applications are going to go down because all the people that were looking at houses at 3% are suddenly thinking, oh shoot, I can't qualify at 5%, or I need to buy a cheaper house. So the fact that mortgage applications have gone down in and of itself is not something to panic and go crazy about. It's to be expected. Okay, we know mortgage rates go up. There's an inverse relationship. We know that mortgage applications go down. Let's take a look at what this article says. It does have some good stuff in it, so I want to just point out a few quick things. Let me zoom in on this so you guys can see it a little bit better. There we go. Okay, home buyer demand for mortgages tumbled last week as the average interest rate went up to a near 13-year high, a sign that the red-hot housing market may be starting to cool off. Maybe, maybe not. We'll see. Mortgage applications to purchase a home dropped 12% on a weekly basis and are down 15% compared with the same week 1 year ago. It marked the first time in 3 weeks that monthly mortgage demand fell. All right, well, hey guys, again, makes sense, right? Makes sense. This isn't anything that I'm, overly concerned about right now, because this is all stuff that, we should be expecting with what's going on in the market and in the mortgage rate environment. Let's say hello to some folks. Chris M says, great info. Thanks, Chris. Thanks for being here. Appreciate you. Riva's on. Hey, Dima, thank you. Riva, thanks for being on. I appreciate you guys. This is a little impromptu afternoon live with some wine. There it is. Get in the frame there. With some wine, because it is the afternoon. I just had an early dinner. I got about half an hour to spare, so I'm jumping on. I want to give you guys some of this information because it's so important. So let's check out some data here. So although mortgage rates have receded from the record high notch last week, the average rate on the 30-year loan is still around 5.378%. By comparison, just 1 year ago, the 30-year stood at 3%. Guys, again, huge difference, right? The difference between 3% and 5.4% is like a 30% increase in your monthly mortgage payment. That's a lot. Rates have jumped on the fastest pace of growth since May 1994, so they are rising big time. Purchase applications fell 12% as prospective homebuyers have been put off by the higher rates and worsening affordability conditions. So obviously, houses have become less affordable because prices have gone way up. At the same time now, interest rates have gone up again. Refinance activity, of course, has plummeted as well. Refinance activity goes up when rates go down, because when rates are lower, people start looking to refinance those old existing home loans that are at a higher rate. When rates are higher than where your loan is, then you don't need to refi, okay? So that's just the bottom line of it. We know what's going on. Policymakers are lifting the federal funds rate, which is exactly what we just talked about. And in order to stop doing that, what it says here is that we need to see inflation coming down in clear and convincing way, and we're going to keep pushing until we see that. So this is actually really important, guys. What this says is that Jerome Powell, head of the Fed, is going to continue increasing those mortgage, or the federal funds rate, I should say, until we see inflation coming down. And so what that means is that interest rates are probably going to continue going up. That is very significant, guys, because we are going to talk about what should you do right now. If you're a buyer, if you're a seller, if you're an investor. And the first thing you should do, if you're not subscribed to the channel, make sure you do that. Make sure you hit that like button on the way in so that YouTube blasts this out to everyone. We can get the message out and we can keep drinking wine. All right, so why is that significant? This is significant for you guys because if you're planning on buying a home, I usually talk about this later, but let me talk about it right now. If you are planning on buying a home this year, whatever your reason is, first-time home buyer, trading up, moving to a different area, getting the hell out of a blue state, yes, I said that right, getting the hell out of a blue state, going to a red state, well, I recommend that you take a look at doing that right now because interest rates, you guys, are going to continue going up for a little while. So if you take a look at our graph again, let's go back to this. So if you take a look at our graph again, guys, look, here's what's happening. Interest rates are up. They actually just fell back a little bit here this week as of May 19th, which I think is today, if I got my dates right. Yes, so as of today, they did pull back just a little bit, not much, 5 basis points, okay? But what I think is going to happen if you continue on this graph is rates are going to continue to go up as the Fed continues to raise the federal funds rate. So if you can lock in your interest rate right now, right, buy that house that you've wanted, and then maybe when interest rates go down, you can refinance. Your other option, you guys, is to take out an adjustable rate mortgage like a 5/1 ARM. So we just said that interest rates are like 5.25, 5.3%. Well, the 5/1 ARM is at 4%. So if you're buying a house that you don't plan on staying in, let's say for more than 5 years, you're thinking maybe this is a starter home for you, or maybe you're moving to a new area, you just want to try it out and you may move, then a 5/1 adjustable ARM might be for you. What is that, you might ask? No one typed it in, but I'm going to tell you anyway. That is a loan that stays fixed for 5 years and then starts to adjust. And you might be thinking, well, Dima, isn't that a risky proposition? Should we not take out an ARM? Well, again, guys, look, first of all, this isn't financial advice. Obviously, talk to your lender if you need one. I got tons of them. They're all awesome anywhere in the country. But at the end of the day, you have to assess your own risk tolerance and also your goals and your objectives. And so if you are buying a house that you're not planning on staying in for more than 5 years, 5-1R might be great for you. If this is a house that you think you're going to flip or you're going to do something with later, then you don't need a 30-year fix. You don't need to pay that extra interest. Randall, aloha from Las Vegas. It's kind of an oxymoron, but I guess we do have Hawaiians in Las Vegas. I grew up in LA, so was a Raider fan growing up. Now you guys got the Las Vegas Raiders. Randall, thank you for joining us. I appreciate you, and I see that, Randall Raider. So guys, that's the deal with interest rates and with this article, but we're not done yet. We got so much to talk about, guys, and if you're enjoying this content, by the way, like I said, make sure you hit the like button, subscribe, blast it out, all that good stuff. Let's take a look at some other things that are coming across today that are very, very critical and very, very important when it comes to the housing market. So even if though, guys, even if you're not interested in real estate, well, you're probably not tuning in. But even if you're not planning on buying a home this year or selling a home or investing in real estate, it's really important to keep your eye on the real estate market. I'll tell you why. Real estate drives the rest of the economy. When real estate is good, people have disposable income, people have money, people are excited, at least they think they have money, they buy more stuff. Okay, when the real estate market is bad, when it's declining, when it's not good, then people don't buy as much stuff. So it affects everything. It affects going out to eat, it affects disposable income, it affects buying luxury goods and services, all goods and services for that matter. And so that's why real estate is such an important thing to keep an eye on. And of course, guys, one thing I do want to mention is, all of this stuff that's going on, is tied and connected to the political landscape in Washington. We talk about it on the channel. Voting has consequences. Policies have consequences. Good policies create good outcomes. Bad policies that don't work create bad outcomes. And what we're seeing right now in the housing market is a direct result of everything over the last couple of years. And I wanted to just bring that up real quick because a lot of people have a short-sighted look and view at a lot of these things. So we look at today and we go, hey, interest rates are up, inflation is up, housing prices are going to come down, it's a terrible time. But the thing is, guys, what led to this is everything that happened starting in 2020 and maybe even beyond. Closing down the economy, issuing a ton of stimulus, increasing the money supply, printing a ton of money. That's all going to have consequences, and the consequences are inflation. And then the consequences of that are you got to raise interest rates to curb that inflation. So everything that we're seeing right now, is something that could have been expected, is something that should have been expected by people if you were paying attention to the political landscape and the policies coming out of Washington. All right, guys, I got another one for you. Here we go. So this article is very interesting. This comes from our friends over at Redfin. And what this says is that home buyer competition falls for a second straight month, hitting the lowest level in over a year. So 61% of home offers faced bidding wars in April, down from 63% a month earlier and 67% a year earlier, as surging mortgage rates prompted buyers to drop out. Guys, I want to pause for a second. 61% of home offers faced bidding wars in April. That's 6 out of 10. That means if you're a home buyer and you're out looking for a home, 6 out of 10 properties that you're bidding on, you're going to have competition. That is a lot, guys. That is a ton. That does not mean that the housing market is crashing. If it said, hey, only 10% of homes have bidding wars, 20%, maybe 30%, okay, now we're seeing a difference. But down from 63% or down from 67% to 61%, okay, we're seeing a little bit of a shift, but not that much, guys. It's not like the world is ending. If 6 out of 10 homes are facing competition, let's face it, guys, a lot of the houses on the market are absolute dogs. I look at the MLS all the time. And so if 6 out of 10 houses are getting multiple offers, that is still a very, very strong market to me. Okay, and let's take a look at more of what this says. Nationwide, almost 61% of home offers written by Redfin agents encountered competition. That is a lot. However, it does say that it's the lowest level since March 2021. So it is down. We are seeing a trend. There's less competition because of those high mortgage rates. Also because of inflation, causing a drastic effect on people's disposable income. You know, guys, look, if you're a middle income family, a low income family, even a high income family, it doesn't matter, and your costs on gas, on cars, on food are all way up, then guess what? You don't have as much money to pay for your mortgage payment. This all makes perfect sense when you really look at it. And when we look at the graph here, we see, right, April of 20, here's, now this would be cause for concern. You see this? 35% of homes competing offers. But ever since, about August of 20, after kind of the pandemic stuff settled down and people understood what it was and what it wasn't, well, people understood, not the government, but that's a whole other video. And that's time for wine. So when you look at this and you see that has just continued to go up, and now it is down a little bit, like we said, 61%. But like I said, we still got 61% of houses, of offers are in a competitive situation. That is a lot, okay? So that is very, very significant. And of course, what Redfin says, which is what we've been talking about since the beginning, is that the housing market has softened in recent weeks because mortgage rates have surged to their highest level in more than a decade as the government tries to quell inflation. Makes sense. Average 30-year fix is up to 5.3%. from 3.7% at the start of March. We've talked about this. And the rise in rates and home prices has sent the typical monthly mortgage payment for home buyers up a record 44% year over year. And guys, I do want to mention something here. So, when you buy a house, and look, we have a real estate team. I've been around real estate for a very long time. When people buy a house, what they're buying really is a monthly mortgage payment. I want everyone to really understand that. Unless you're paying cash, and even the cash buyers end up refinancing into a loan. When money's cheap, it just doesn't make sense not to. So, when you're buying a monthly mortgage payment and the interest rates go way up, your monthly expense goes way up. And so then what happens is, people pull back. Either they buy a less expensive home or they spend less, or however that looks for them. And so that's why the monthly mortgage payment and the interest rates are so expensive, right? Let's take a look and see what else. Whoa, where'd I go? Let's take a look and see what else Redfin has to say here. It's actually a pretty good article. So, the meteoric rise in mortgage rates is prompting more house hunters to back out of the market, causing competition to cool. Hey, like I said, this is all expected, okay? Nothing new, nothing crazy here, okay? Higher rates are also limiting home buyers' ability to significantly bid up home prices, meaning some homes aren't selling for as much over the asking price as they would have a year ago. This could help set off a slowdown in home price growth in the coming months. All right, guys, this is actually very important. So I want you to understand what we're saying here in this article. What they're saying is that in the past, the bidding wars would take the prices up much higher. Let me give you an example. Let's just say, for example, you got a house that's listed for $500,000. People are bidding on it. Interest rates are 3%, like they were a couple months ago. All right. What happens is everyone is able to bid that price up way higher. They could go to $325. They can go to $350. Maybe they can go to $400 because the rates are so low that their mortgage payment doesn't change that much. Now, let's shift our thinking. Mortgage rates are now 5%, up 30%, 40% from where they were. Same house, $500,000 asking price, or $300,000. Where were we at? Now I lost track. But whatever the asking price is, let's use $500,000. Okay, buyers cannot bid up as high because every time they go up $25,000, $50,000, $100,000, their mortgage payment goes way up, and so it's limiting the buyer's ability to outbid other people to bid those prices up so high. Not so good for sellers. So if you're a seller, you want the highest price. What you really want is you want a bidding war. You want as many people bidding on that property as possible because the more people that bid, the higher the price goes, just like an eBay auction. And by the way, Reba said this is great information. Thank you so much, Reba. Thanks for being on. I appreciate you guys. I appreciate all you guys jumping on here. Impromptu, no notice, jumped on, and we're rocking it. Talking about housing market, mortgage interest rates, inflation, and everything else that's going on. All right, so the drop-off in bidding wars is one of many signs the housing market is slowing. Pending home sales are down 6% year over year, largest drop since 2020, and mortgage applications are down. Well, we already know mortgage applications are down even more than this because of the article that came out today. Home tours and online housing searches are also falling, and the share of home sellers dropping their asking prices is at a 7-month high of 16%. That is also significant, guys. So, when people start dropping their asking prices, what that means is it could be one of two things, all right? First thing is maybe they listed the house way too high to begin with because they were too ambitious, too excited, too aggressive, all right? Or secondly, it means that no one's buying it, and so they got to reduce the price, or maybe a combination of both. So when we start to see that happen, we know that that's a big deal. There's a lot of people lowering their prices. That could mean housing market slowdown. Let me show you some cool information here from this same article. So this is the competition for offers based on metro area. And you could see April 2021, March 2022, April 2022. So this is like a year, here to here. This is a month, okay? Competition again. So let's look at some fun areas. Let's start with Dallas, Texas, Big D, where I am right now, coming to you live. So Dallas, Texas, we are at 70% of real estate prices or offers are facing competition. That is a ton, guys. 7 out of 10 houses. And if you look here, it's not one of the highest. I guess there's a lot of higher ones, but 7 out of 10. Now, again, that is down because this time last year, it was 8 out of 10. But still, guys, just think about this. 7 out of 10 offers are facing competition. That is a ton. All right, that's still an extremely strong seller's market. Is that going to last forever? No. Are things changing? Are things coming down? Maybe back to reality? Sure. Let's take a look at some other markets. If you have any markets you want me to look at, throw that in the chat box. But we looked at Dallas. Randall's from Vegas. Let's take a look at that. So Vegas is at 60%, down from 70%. So everything's down, looks like about 10%. LA, 68%, down from 74%. So not as much of a decrease. Miami's an interesting one, guys, because the Miami condo market is always kind of the first one to go sky high, and it's also one of the first ones to come tumbling back. So Miami, we're looking at 53%. So half the time you're going to be in a bidding war, down from about 6 out of 10 there. Nashville's interesting. Check this out, guys, and I'm going to tell you why this is in a second. Nashville, Tennessee, 71% bidding wars. Basically the same as last year and up from a month ago. Why is that? Because everyone from the blue states is moving to Tennessee. Everyone from the blue states is moving to Texas. Everyone from the blue states is moving to Florida. I got a good friend, speaking of Florida, here we go. This one's from my buddy Ken Pozick in Orlando, Florida, right here. Bidding wars, 64% of the time. Same as last year, so it looks like Orlando is still on fire. Good news for Ken and his team, which you should contact if you want to buy or sell a home out there in Orlando. Totally unprepared plug, and Ken will be excited about that. All right, so you can look at all these other markets, right? Phoenix, hot market, pretty much the same as a month ago, down about 10% from last year, which is kind of to be expected. San Diego, we're still at 70%. So guys, moral of the story is we're seeing huge bidding wars basically everywhere. Yes, they're down just a little bit, but not enough to make everyone completely nuts. Not enough to say, hey, it's a housing market crash or anything like that. Let's look at one more. So here's another article. It says that existing home sales retract 2.4% in April. Existing home sales fell for the third straight month to a seasonally adjusted rate of 5.6 million, and sales were down 2.4% from the prior month and about 6% from 1 year ago. With slower demand, the inventory of unsold existing homes climbed to 1.03 million, or the equivalent of 2.2 months of monthly sales pace. All right, guys, this is something that I really want to highlight. My favorite chart, my favorite statistic, my favorite thing that I look at when it comes to real estate, when it comes to supply and demand, is something called the month's supply of inventory. If you've watched my videos before, and you can check them all out on the channel, you know that I talk about this statistic all the time. And the statistic and the legend goes something like this, okay? If you have a housing market where the month's supply of inventory, is somewhere between 3 and 6, that's a balanced market. Under 3, you have a heavy seller's market. That means there's not enough houses, there's a lot of demand, people want to buy, prices are going up. If you see month supply inventory over 6, that means that it's a buyer's market. There's not a lot of buyers, there's a lot of sellers, prices are coming down. We have been in a heavy seller's market for quite some time, under a month of inventory, in fact. So what this article is now saying is that we are up to about 2.2 months of inventory, right? Of inventory, and this is across the country. This is nationwide. Remember, guys, real estate is local. You got to see, you got to drill down to what's going on in your local market. But nationwide, 2.2 months. So is that up? Is that crash worthy? Maybe not. It does mean we're seeing a little bit more of a balanced market, which actually is a good thing. Now, if that number gets to 3, 4, 5, 6, 7, then we're in trouble. We got to start looking at the market and saying we're in a tough place. But right now, 2.2 months, it is trending into more of a balanced market. That is okay. The median existing home sale price increased at a slower year-over-year pace of 14.8%. So guys, look, housing market's still up 14.8% year-over-year. That is huge. Is that going to continue? Is that sustainable? Probably not. But as of right now, we're still going up, and we're still going up big time. Existing home sales recorded a third straight month of declines, although it is dipping. And that is really what this article has to say, which is a pretty good one. All right, guys, so I've given you all the data. I've given you all the analysis on that data. What do you think? What do you think the housing market's going to do? I'd love to hear from you. Throw this in the chat box. You think the housing market's going to crash like some of the gurus are saying? By the way, guys, thank you so much for all of the likes. We got a bunch of people hitting that like button. I appreciate it. That'll send the video and the channel out to new viewers. People start watching the channel and everything grows, and it helps me and it helps you guys for sure, because then I can provide you with more valuable information. So I appreciate it. But what do you guys think? You think the housing market's going to crash? You think it's just going to have a nice tapered slowdown, or do you think it's going to keep going up but not in as high of a pace? So you got option 1, option 2, option 3. What do you think? Let me know. JG, thanks for jumping on, man. Really appreciate you. Thanks for being on, being a watcher here of the channel a lot. I really appreciate that. By the way, guys, if you don't follow me over on like Instagram and Twitter, I do a lot of fun stuff over there. Probably talk a little more politics on Twitter just for fun, but if you want to follow me over there. So anyway, guys, what do you think the market's going to do? Throw that in the chat box. Number 1, it's going to crash. Number 2, it's going to have this kind of tapered soft landing. Or number 3, it's going to keep going up, but maybe not as much. I guess number 4 would be it's going to keep going up by the same clip, but we're not seeing that right now, so I don't think anyone would guess that. And guys, my opinion on this, I'm going to tell you my opinion on this. I'm going to start with real estate is very local. Real estate is a local business. National numbers matter. National policies matter. That's why the policies coming out of the White House that are causing inflation, the overspending, the overprinting of money, okay, all of those things are causing inflation. They're causing rates to now go up, which of course causes prices to come down and causes the housing market to cool, right? But my opinion, real estate is local. So you got to start with your local market. What's going on in your local market, right? How many months supply of inventory do you have? That is going to drive supply and demand. And based on that, you can figure out where your market's going. My opinion is I'm seeing a lot of migration from blue states to red states. I'm seeing so many people leaving my old state of California coming to Texas. I'm seeing the market in California soften a lot, even though the numbers I showed you don't really support that yet. But I'm seeing the market soften a lot. I'm seeing people cancel contracts there. I'm seeing inventory go up. And so what that's ultimately going to do is it's going to put some downward pressure on pricing, or at least some stabilization. Hot markets like we'll say Dallas, we'll say Tennessee. Those markets are seeing a lot of influx of companies and people. I don't see them cooling off that much. Now, these rising interest rates from 3% to 5%, of course, will cause some flattening because there's a lot of buyers that now can't afford to buy. So I think we will definitely start to see that. However, in these strong, high demand markets like your Dallas, like Nashville, I think those markets are going to be just fine, because I think that so many people are moving there, and we're seeing this migration, which these articles are not talking about. that is causing that high demand in those areas. So you're a buyer, you're a seller, what should you do? Well, guys, look, like I've said all the time, if you're a first-time home buyer, if you're looking to trade up, it's all about time in the market, not timing the market. Lock in that interest rate, buy your home, enjoy it, don't worry about it. If you're an investor, make sure you build those margins in. If you're a seller, guys, now's still a great time to sell. I mean, look at it. Home seller competition, 6 to 7 out of 10 houses are seeing multiple offers. So if you want to sell your house, now's a good time. Who you work with matters for sure. Down in the description below, you can contact our team, Discover Properties. We work in California, Texas, and really everywhere in between. We have either agents or referral partners that we can help you out with. If you need a mortgage lender, we can help you out with that as well. So guys, I got to take my son to basketball practice, but it has been a pleasure to jump on here live, impromptu, with a little bit of notice. I want to thank all of you, each one of you, for jumping on here. I hope I've provided you with some good value on the housing market, on how to analyze the housing market and where I think it's going, and hopefully that helps you with your decision making, since on this channel, I'm all about finance, freedom, and fun, and helping you build financial freedom in your life and helping you achieve the success that you want to achieve. So thanks for jumping on here, guys. Make sure you subscribe. I'll see you on the next live or on the next video. Take care. Have a great night.